Ladies and gentlemen, executive summary time. Wow, what a day. We have been looking for the market to break open range now for a little while. You can see that open range was set on Monday. We didn't break the high or low yesterday. We did not break the high or low today. So it's a real kind of battle of the wits from the buyers versus sellers. Now, what the S&P 500 is currently telling us is that we are in a descending triangle formation. You can see we have equal lows and lower highs. Now that should normally mean bearish. We can see that there's also kind of a lowering money flow. But we also saw this back a little while ago when there was a head and shoulders formation forming, which did not end up breaking down anywhere near as much as it should be. Okay, so this market seems to be propped up. And what this would indicate to me is that we could quite possibly be leading to a this fake-out type of downward pattern where we're actually going to go higher. And to a technical to analyst, this is this is almost technical sacrilege. This is one of the few times where I feel we should ignore the S&P's pattern. Now, I may be wrong, but everything that I've looked at today tells me that there's money coming into this market. I've been researching the stocks now since probably about 4 o'clock this afternoon, so I've been doing about probably that says 7 hours of research, and I've looked through thousands of stocks, and I've came up with 38 fantastic longs, but only 8 shorts. So that's telling me something. So tonight is going to be a little bit longer than usual, but it's only because I want to share with you the top stocks that made my filters. Now, hopefully you'll have time to review this, to analyze them and decide for yourself which you like or don't like and what meets your own parameters. But here's the first on the list. What I'm looking for basically is momentum stocks, because that's what's coming up at the moment. And the first one is PNX. Now this is a very speculative company, low volume. They've just come out of a lawsuit situation. They've obviously dropped a lot from their prices up at $56 all the way down now to $18.57. And this looks like a potential momentum play where the squeeze has occurred, and this could be a potential rally from where it's currently priced at $18.57. I'd be looking for a break of kind of $18.63. And that could be a rally to at least $23. The way I would play that, however, is I just keep updating my stop loss as that goes up. So again, looking at 1867 to at least 23, and just continually bringing up the stop loss. The original stop loss I'd be looking at is just kind of sitting under the low of yesterday's candle of 1738. So looking at 1727. There's the first one. Now, PNX also has a good stochastic. If we have a look at that, you can see that we've been making higher lows on lower prices, and also sharp lows, which is indicative of buying strength. So it's also got insider buying and institutional buying. So PNX was one that kind of topped my list. One you might remember from last night, which was a big win today, was DSCI. And of course, that kind of had that same kind of characteristics, that downward swing and up. We picked that this is our number one favorite, and that rallied 7.82%. And of course, also NQ we talked about might have a further rally, and that was up another 15.42% today. So hopefully everyone's paying attention to these alerts, because there's been a lot of money made in these markets, and despite the volatility, despite the sideways actions of these holiday markets, there's a lot of stocks with their own personalities making moves, and you need to know what you're looking for to make plays. So so those are a couple. So there's PNX. AERI is the next one. Same kind of move, just kind of sweeping the floor with that stability there at the bottom, and propping up 1.9% yesterday, 5.76% today. Now the 1.9% yesterday was on 668,000 volume. Today was on 1.38 million volume. So we're seeing pressure to the upside. Obviously, we're going to get some short squeezing here, but this one could be also a possible long around the $13 level. And again, looking at just with his momentum play, just raising the stops as they go up, or potentially go up. And this one could at least fill the gap up to the 1543 level. So AERI from anywhere underneath 1310 to 1524. Is what I'm kind of looking at. Could be an interesting play. Okay. Now, you're going to see a lot of the same kind of thing here. Now, this doesn't mean we're playing all of these longs, and what a lot of the time I'll do is I'll set up OCO orders or OCO groups so that you can allocate how much money you want to put into a long position or long into the market and spread it across 5 positions. But you might say, okay, well, whatever position hits my ideal entry first kind of gets the money. That's what an OCO group is. It's one cancels other. So this is another one that could kind of come into that type of group I'm looking at. Now these are kind of lower volume stocks, but there's a lot of movement in these types of stocks that have their own personality. This one's kind of coming out of a consolidation wedge, and as you can see, it just kind of popped today. And KCAP has that potential. It's not as juicy in terms of profit-wise as some of the others, but has the potential to pump. If it breaks the kind of 623 level, 624 level, excuse me, to go up towards that moving average, which is just under that gap fill, and I'd be looking at that moving average here to up to about that 653 level. So we've got about 30 cents or 5% on that one. I'd be looking at setting a stop below the low of the previous candle, which is 610. So look at I'd be looking at 607. Okay, on to the next. CRMD. Now, this one's also been a very interesting stock because this, again, you can see that same kind of scoop at the bottom, bounces off the moving average and surged 3 days ago, going up 16.58% and then consolidating. You can see this hammer candle here. So anything above 703, I think, has a good potential to rally right up underneath this resistance line. So from 703 up to this level, just sitting where that moving average is at 752 would be where my kind of first target would be. But this could get all the way up to about 781. Okay, moving on. You're going to see a lot more of these pharmaceutical stocks. IG. This one has had nothing but blue candles, which means what? Means that the money is sticking with the stock. It's holding its highs, and that's why you can see things like Twig's money flow going up. It means that the smart money's seemingly going in and sticking with it. Now, again, with a lower dollar stock, in these types of markets where volatility is low, with the big boys like Apple and so forth that just look just like the market, I've got no time for that, because why trade Apple when I can just trade the S&P? And to be quite honest, I don't trust the S&P, so I don't trust the big boys either. What I'm looking for are stocks that have their own spine, things that can move against the grain. And this is kind of one of those things that also looks like that. And looking for a break above 651 here, and that could rally right up into that kind of upper level resistance to 737. So from 651 to 737, again we have some decent profit, which is about approximately, what are we looking at, 86 cents. So above 10% as a potential move there. Money flow supporting, another good potential momentum play. ENZ, another one. Now, the list keeps on coming, so do your own due diligence as to what kind of hits your buttons. But these are stocks that just keep having that same type of formation. ENZ, again, you can see the smart money flowing into the stock. Lower price stock, but it's trading about 260,000 shares a day, so about $500,000. But this is a bump and run formation. Now, we could see a pullback on this. So this isn't as much as one of my favorites as the ones just starting the move. But again, given the type of price rate price ranges we're talking about, a quick pop could bring us close to that $3 level, which would be a 20-cent move, which would be around 6-7% if we kind of get out just shy of that level. So this might be more of a watch to see if we get a pullback, but again, could be a surge if we see this just pummel through that and continue on up. And where I see this more likely getting to is up towards that 320 range, where we can see some of that previous resistance, or that smart money resistance we talk about in a lot of the webinars we've been discussing earlier. So there's your kind of resistance zone sitting here. So I would expect that ENZ is going to get much more likely towards that 317 level before I'd see a sell point. Okay. Now moving on from ENZ, we got CAPN. Again, same kind of story. There's no news on this stock, but apparently we've gone from 72,000 shares yesterday to 1.35 million. Now, unless you can find it somewhere, I haven't been able to find any news on Yahoo Finance and so forth, so there's some volume coming from somewhere. And this stock obviously is a lower volume stock, a previously lower volume stock and a low price stock, could benefit from the surge we're seeing in kind of this speculative side of the market. So this is something, again, that if we see a break of the high here of this 491 level, then we could see a surge all the way up to some of these previous resistance levels, such as this at $6. Now that's a pretty decent rally. Now this is very speculative, but the money flow is indicating something's potentially going on. Could be a pump and dump, and that's why I'd be fairly speculative in this case and look at a little bit slighter, more conservative type of target where these moving averages come into play, and that kind of brings us down to that 568 level. So from 475 to 568. We're dealing with about a roughly 80 cents, or again 20% type of potential rally. So again, CAPN, another one on that the momentum play. CBAY, next on the list. Now again, you're going to see the same type of thing. Stock depreciating, money flow going up, a therapeutics company. This is the hot area of the market right now. Pharmaceuticals, therapeutics, healthcare. Again, be aware of the bubble. Anything speculative is bound to perform in hyped up markets. So we're probably boiling towards some kind of ceiling, but who knows when it's going to come. Right now, money seems to be flowing into the markets, and as far as we can see, it's flowing out of energy and into healthcare and pharmaceuticals. If you look at all the energy stocks, they're doing very poorly at the moment. But therapeutics, healthcare, technology, doing well. So that means that essentially we're chasing speculation, and that warns of a bubble. But that bubble hasn't popped yet. So let's enjoy it while it rises. So CBAY is one that we're looking at. You can see it's had a fairly nasty decline before. Again, not one that I would necessarily be chasing, but one that if you're a day trader could be fairly lucrative in terms of looking for that intraday movement. Could quite likely kind of regain some of its previous ground and get up towards that $4 mark. From $3.46 to $4, I mean, that's a pretty decent return. So it's a highly volatile position and one that you'd need to manage carefully, but this is another one that has topped our list out of thousands we reviewed that could be a possible day trade scenario. AMRN, possible flag. Now this had a big pump, 18.97% move, but of course the intraday highs were much higher. They went up to $2.80 and retraced back to that close at $2.32. Now what you can see is that we've broken that range that we were set as a ceiling of around 240 today, and the volume confirmed. We went from 1.84 million yesterday to 3 million today. Could we resume the previous highs? Possibly. I wouldn't be that greedy. What I'd be looking for is a possible 10% pop up to around this kind of 263 area. If we have a look at any significance that has in the previous pass of the chart, we'll go back and have a look. You can see that's kind of right where that resistance was in these previous candles. Therefore, I'll look at the high. The high here was 245. High here was 244. So I'll look at that as the kind of resistance level we need to break. So the high of 245. So let's say 247. And then we have a look at where these candles start to consolidate around 260. So around from 247 up to that 260 mark would be the way that I would be looking at the most immediate targets. So not a huge amount of potential for that first target, but the second target, if we start to get to those higher levels, could be greater. And I'd be looking around that this 273 level. Now we're getting down to the last few. FGEN. Significant money flow, more of a watch because we haven't yet moved. But again, you can see that a quick bump from 18 bucks up to 20 is an easy 10% if it's able to overcome the resistance at 18.36. Money flow is substantially divergent. That's very positive, saying that money flow is starting to come up into the stock. We haven't broken new lows. Again, same kind of industry. This thing's moving great. So this would be yet another one in this similar kind of momentum play. And by my charts, that brings us to the end. So I'll be looking at this early in the morning. A lot of these I'll be looking to take positions in. So for now, it's a matter of making sure that you keep your risk-reward ratios tight and your allocation of capital safe. Now, just because we've talked about a bunch of positions tonight doesn't mean we're going to go and take $1 million and spread them across all of them. The key to successful trading is conservation of capital and management of money. So ensure that take your own, obviously, your risk requirements into consideration. But what I'll be looking at is to create OCO groups amongst all of these stocks so that whichever hits its ideal entry zone first, with the best risk reward, will be the one where my capital is allocated. Therefore, if in the case we're completely wrong and the market drops considerably tomorrow, it's not like we're betting the house and farm on these on going long on the market. These are just a selection of possible opportunities for you to have a look at that may fill your basket. So for now, that's John Seville from Acorn out, and happy trading.